Hello and welcome to another update video about Render. Render is a pretty poor probabilities chart, as already explained before. Be careful when you're dealing with diagonal structures. When you're doing that, you need to be aware that the direction of the chart could change quickly. Always bear in mind that not every chart is clear, okay? In fact, most of the altcoin charts are pretty bad. I mean, this one here at least is in an uptrend, but still it is a diagonal structure, which leaves a lot of room for interpretation, yeah? This is a potential three-wave move to the upside, okay? So it could turn into a lot of stuff. It could turn into a lifetime downtrend potentially. It could turn into a triangle pattern. So I can only warn, yeah, about charts like this. If you're buying this because of fundamentals, then you're not using Elliott wave. That's fine. That's your decision. If you buy this based on another method, that's fine as well. Yeah, you can do that. I can just tell you that Elliott wave tells us that as long as it's holding 45 cents, there's still a chance for higher. Well, that means that it can theoretically drop a lot before really turning into a long-term bearish chart, which tells you a lot about the risk of this chart, okay? I think this is something where if it gets into the yellow support area, it might become interesting from a reward to risk standpoint, but probably not even when it hits the 38.2 Fib level at $1.18, even though I think there will be quite a bit of support there. So yeah, I would be just aware that this chart offers less certainty than some other charts that have a longer chart history and that provided us with impulsive price action in the past. Be aware that it hasn't even made a new all-time high at this stage, so hasn't even proven to us that it's in an uptrend, really, in a long-term uptrend. Yes, short-term uptrend, surely, since June 22, absolutely, but very choppy, and that always leaves a lot of room for interpretation. And also I would be careful because it broke out of the downside of this ascending wedge, okay? So I've warned about this chart before that it is quite uncertain. The $1.70 level was a key support. It broke. So if we're using Elliott wave or not, I mean, breaking this, and this is a head and shoulders pattern, certainly doesn't give you a lot of confidence for further upside, in my opinion. This could be a wave 4, yes, but support for this wave 4 is uncertain where that lies. We can add Fibonacci levels, and then the support for this wave 4 would be, the next one would be $1.35 and $1.06. And below 83 cents, I cannot call this a wave 4 anymore. But typically what you would do when you're trading a diagonal, you would wait for all 5 waves to be complete, then wait for a decent pullback, and then you can scale in again. That's a reasonable way of handling this when you're dealing with a diagonal. The problem is this diagonal looks incomplete. It looks like a 3-wave move up, not 5. So, however, I could, with a question mark here, say, okay, maybe it's complete. That's the problem with diagonals. You have a lot of room for interpretation. If it's complete, it could come down all the way to 45 cents in a more extreme case. This is the yellow support area. Yeah? So if anybody's interested, I mean, this is the support area where normally, if it's already a wave 2 in which we are, the turning point should be. But also you would normally expect a clearer ABC structure. And if you look at the length of this, that move up started in June 22, potentially ended in May 23, so a year. So this correction is not going to finish in a month or so, in 2, unless it's just a wave 4 and we get one more high. But you don't know that, okay? So you would here really act on a very uncertain chart. Now, I gave you the Fibonacci support already. I warned that we obviously broke below this neckline of that head and shoulders pattern, and it seems to be retesting that from below. However, there are a few things that you can use. I mean, first of all, we have a descending trend line. If we get a break above this trend line, it might be an early indication that this wave 5 is starting. From here, yeah, I wouldn't say this is, if it goes up from here, this was not wave 2. This would be far too short. But it could be a wave 4 with a wave 5 to come, which should, of course, go above 295. But I think you need some kind of a trend line break to get an indication that we are here in a 5th wave. What else to highlight? I mean, if it's a wave 2, then it should give us a clearer ABC structure anyway. So a B wave bounce might happen at some point. Looking at the indicators, the daily RSI was pretty oversold. So it came into the area around 30, but it's still in the bearish range. And you can see since June, it's been sort of oscillating here in this area between 50 and 30. That is a bearish trend, okay? So I would say we are here rather in a downtrend. Oops, didn't want to do that. we are here rather in a downtrend. I wouldn't have any information, or even though the MACD turned bullish, but it's just one indicator. I mean, you have a price broke below a head and shoulders neckline, might just be retesting it from below. You have an unclear Elliott wave structure. You're moving in choppy price action. The RSI is in the bearish range. Yes, the MACD is short-term turning to the upside, but it did that before in this downtrend, so I wouldn't pay too much attention to that. So for me, I haven't got any clear view that this local downtrend is over. I highlighted to you many times that $1.70 is key support. If that breaks, we might be looking at a drop into the yellow support area. Again, if it turns up early, then we are probably still in the diagonal, still in a wave 5, but that's uncertain at this stage. And if that fifth wave then is complete, it should still offer us a more reliable, let's call it, trade setup in a pullback, okay? But yeah, at the moment, this is a rather uncertain chart. Obviously, the lower we go, yeah, the better the reward to risk ratio. What I can tell you is that this move down currently looks corrective, at least. Not impulsive, but corrective, which is good, and would rather confirm that further continuation at some point to the upside is to be expected. But at the moment, there is no, I have no view that this correction is over, especially as we just broke below key support, and it could not generate enough buying interest at that 170 level. So yeah, it's above that, but again, we're still below the trend line. So we can see if we break above the trend line, it might get some buyers interested. And if we are adding the VRVP to the chart, then you get an understanding of historical additional support areas, right? So as you can see, around this current price range is basically, there has been a lot of historical support or just price action. So that's why it's slowing down here. If we go any lower, the next spike would be around 135. And then there is a lack of historical volume. So it could potentially drop quite quickly through these FIB levels. We'd need to pay attention to that, but we're not there yet anyway. So at the moment, I think this action here is no action and just waiting for some clarity, either waiting for a breakout of the trend line to get a view that a potential wave 5 has started, or it could even a B wave. If we're in the wave 2, it could be a B wave rally. So it's extremely hard to navigate this chart, I would say. So why make it complicated? Why not rather focus on a chart that's a bit clearer, in my opinion, unless you want to buy this because of fundamentals, but then you don't need technical analysis, I guess. So this is my view. There are tons of interpretations about this chart, because the problem is, and I haven't even put that on the chart, that's a bearish interpretation. I mean, this could just easily be an A wave, a B wave, and a C wave here. Yeah, and potentially heading to new lows. That's the problem with charts like that, unfortunately, okay? So I would, action here, I think, is at the moment do nothing and then just wait for a clear indication that a local low has been established, or even a lasting low, because that's what most people would be interested in, to get an understanding that a lasting low has been established. But based on everything we see here, you can see we're in a short-term downtrend, getting surely closer to support at this stage, but still below a descending trend line. And yeah, that can be watched for a potential breakout, of course. And structural resistance, if we talk about structural resistance that the price would need to get above, well, surely you've got here this area around 230, these previous swing highs. That's important. Then we've got 264 and $2.91 as breakout point to new all-time highs, where we could get back into price discovery. That's my update about RNDR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.